speaking with the management of Ashok Leyland in just a short while from now. In fact, let me welcome on board Shenu Agarwal, the MD and CEO at Ashok Leyland, to talk about how their numbers have been. Mr. Agarwal, good to have you today on ET Now. Help us understand what's your outlook for the CV segment for the entire fiscal, especially because it appears to be in a bit of a down cycle currently. Also, you've managed to achieve your EBITDA margin guidance in Q4. Do you see the margins as sustainable?
As far as the CV cycle is concerned, we remain very optimistic. Although this is the fourth year of the up cycle, but we still think that there is a lot of steam left in CV cycle. Even if you look at last 3 years, the market has been more or less muted, right? But we do believe that both in trucks and bus segment, there is ample opportunity, there is ample headroom. Right now, all the macroeconomic factors are also favoring us. The freight rates have gone up slightly. The profitability of the fleet operators is also quite healthy right now. The monsoon prediction is good. The government capex, I think, is back on track right now, right? So, and the interest rate environment is also favorable. So, I think with this all-time peak of the aging of the fleets and all these macroeconomic environments pointing in the right direction, we are very optimistic that FY26 should be a growth year for the CV cycle. As far as the margins are concerned, as you are aware, in FY22 we had declared a EBITDA margin of roughly 4% or 4.1%, right? And from there, we have moved the needle to 8%, then 12%, and then in FY25 now we have achieved 12.7%. So we are very happy with the margin trajectory.
Right. So would you expect FY26 margins to be better than what we've seen in the previous fiscal?
No, definitely we are looking at better margins for FY26. Like I said, there are a lot of levers working in our favor, and we will continue to explore more opportunities around those levers, right? Quarter one, like I said, maybe we have a slight pressure from the commodity prices side, but quarter two onwards, I think that should subside. Right. So overall for the year, we are very optimistic that our margin trajectory should improve from here onwards.
All right. Hi, very good morning, Mr. Agarwal. This is Shrishti also joining in. But when I look at your cash position, so from a debt on your books in the last fiscal, you have moved to a surplus situation of cash surplus of over 4,200 crores. What explains this sharp turnaround and how do you plan to utilize this surplus?
Yes, as far as our cash position is concerned, we are very happy with the massive turnaround actually we have been able to deliver in FY25. At end of FY24, we still had a net debt, although a small one of 89 crores. But now at end of FY25, we have a cash surplus on the balance sheet of more than 4,000 crores. Yeah, so that's a very big swings. And the factors that have helped us achieve such a turnaround in our cash position is definitely one is the profit is much better. The second is that we have been acutely focused on managing our working capital much better. Also, we have been very, very sharp on creating a lot of efficiency in our capex spend and also putting some threshold barriers to our subsidiaries for their investment needs, right? So all of this in combination has really helped us generate this cash surplus of 4,000 crores. Now, since we are in this position now, this gives us actually a lot of strength to take Ashok Leyland on a future growth path, right? So therefore, this money that we have in the balance sheet right now will be spent mainly on the capex.
You had indicated a Q1 FY26 listing of Hinduja Leyland Finance with market conditions turning a bit volatile. Are you looking at revising the timeline?
Previously, we had said that we are looking at Q1 FY26 for listing of Hinduja Leyland Finance. But at the same time, we also said that we are still awaiting some approvals. So those approvals, some of them have come, but some of them are still pending. Although now our prediction or forecast is that these approvals should be coming quite soon. Yeah, so once those approvals are there, I think we should not take more than 1 or 2 quarters to list this company, right? But we are still waiting for some approvals, as I said, and as soon as we have those approvals, we'll let you know. But yeah, listing should happen within 2 quarters after the approvals are received.
All right, but what's your outlook for the defense segment in FY26? Could you share your current order book, if at all, and the growth targets for the year?
It is a very dynamic order book, but see, our top line on defense is above 1,000 crores. I can tell you that, right? And definitely, like we said previously, we would expect to grow it by more than 25% per year, for at least for next 2 to 3 years.
All right, well, Mr. Agarwal, when it comes to the Switch Mobility, then Switch Mobility India specifically has turned a bit positive this particular year. But what about the growth targets here, and by when can we expect the business to turn PAT positive as well? Give us some sense there that when do you expect the bottom line to actually turn positive?
Yeah, we're very happy with the progress of Switch entities. You know, we had taken two large decisions in this respect over last few quarters. One was to restructure Switch UK. As you know, we had told you last time that we were contemplating shutting down the manufacturing operations of Switch UK, right? So that is under process right now. We are almost there. I think within a couple of months that whole process will be completed. And you are aware that we were making losses in Switch UK continuously for many years, and therefore those losses should stop now, right? So Switch UK is one part of the story. The other part of the story is Switch India, which is actually exactly opposite to Switch UK. Now, Switch India has been growing very well. The prospects of the bus industry or the electric bus industry, electric light commercial vehicle industry in India are very strong. And we have been able to rationalize the cost structure of Switch India in many different ways, and also ramp up the volumes of electric buses and electric light commercial vehicles to the effect that, Switch India is now EBITDA positive as of March ending March 2025. Now, our next target is to make Switch India PAT positive within FY26. So we are working very diligently on that target, and we are very confident that Switch India will continue to grow and will continue to rationalize its cost so that it can become PAT positive. So very happy with the overall progress of restructuring of UK and a good growth, both volume and margins in Switch India.
All right, Mr. Agarwal, with this, we let you go on that. Thank you so much for taking the time out and speaking with us, and all the very best for the upcoming earnings. So, market.
If you like this video, then like, share and subscribe to ET Now.